Welcome to our video. You decided to buy a home. Now what? I am Stacy from First Commonwealth Bank, where it is our mission to improve the financial lives of our neighbors and their businesses. Deciding to buy a home is a big decision, and knowing what to do can be a challenge. In this video, we will share the steps to get your journey started. The first step is to find a mortgage loan originator, also known as an MLO, to work with. This partner will be your guide through the whole process, from getting pre-qualified for your loan to the closing of your loan when you actually get the keys. It is important to find a partner you can trust, who will be available to answer all your questions and who will work hard for you to make your home buying process as smooth as possible. One of the first things your mortgage loan originator will do is to help you get pre-qualified for your loan. This is different than applying for a loan. A pre-qualification is a quicker process. It is based on a credit check and information you share with your MLO. The credit check means the MLO will run your credit report and get a credit score for you from each of the 3 credit bureaus. The questions your MLO will ask you will be about your current income, work history, current debt, and more. It is really important to be completely honest with your MLO throughout the process. The more detail you share about your finances, the better it will be. Financial details matter. For example, share with your MLO if you frequently receive overtime pay. A pre-qualification is required by most realtors so that they know you are a screened pre-qualified borrower. When obtaining a pre-qualification, you will be provided with multiple payment options based on the market and the area you're looking to buy a home, as well as the maximum loan amount for which you would qualify. The pre-qualification also factors in taxes based on the current market you're looking to buy. This provides crucial information for payment-conscious borrowers. One of the most important things you will work on with your MLO is figuring out what type of loan will be right for you. There are many types of loans, and which one will be right for you will depend on your unique situation. The type of loan you qualify for might impact the decision of where you buy your new home, so it is important to talk about this with your MLO early in the process. An example would be a USDA or U.S. Department of Agriculture loan, which can provide benefits for borrowers who buy specifically in rural communities. By knowing where you're looking to purchase, your MLO can provide you with every possible option. Next, you will spend time looking at homes, doing research about the neighborhood or school district you want to live in. And when you find your dream home, make an offer on it. If you're working with a realtor, they will be very helpful during this process. Once your offer has been accepted, it is time to apply for your mortgage. Many homebuyers have questions about how much of a down payment they will need. There is no one right answer to this question, and it might depend on the type of mortgage you have. However, it is important to know that for some types of mortgages, if you put down less than 20%, you may be required to pay private mortgage insurance, or PMI. Mortgage loans with less than 20% down payment represent a higher risk to the lender, and PMI safeguards the lender in the event the borrower is unable to pay for their home. PMI also benefits borrowers because it gives them an opportunity to finance a property with less down. The amount of PMI will depend on the size of your mortgage and will be included in your monthly mortgage payment. In most cases, the mortgage insurance will either decline in price over time or will be completely eliminated once your loan is paid down to a certain balance. Again, exactly how PMI will work for you will depend on the type of mortgage loan you have. There are some types of mortgages that do not require a PMI with less than 20% down. This is a great reason to partner with your MLO as you're starting to shop for your home, so that you know if those types of mortgages will work for you. It is also very important to know that you cannot use cash for your down payment. If you have been saving for your down payment with cash, you need to deposit it into a bank account as soon as possible. Typically, there will be a concern with using money for a down payment that has not been in a bank account for at least 60 days. It is good advice to not use all of your savings for your down payment, since you will need money for closing costs, and there are expenses that will come with your move. There might also be unexpected repairs or other costs, so saving reserves are very important. A great rule of thumb is to save up enough money to be able to pay 3 months' worth of your bills, including your new mortgage payment. Another type of insurance to consider is title insurance. The title to a piece of property is the evidence that the owner is in lawful possession of the property. Title insurance protects buyers and lenders from any financial loss in the event there is an error or something that was unknown with the title to the property. Examples include another person claiming ownership of the property, past unpaid liens or taxes, past fraud, or any errors that were made when the documents were filed. It is a one-time premium that is paid at closing, which varies by state, and is related to the value of the property. You can choose the title company to handle the purchase transaction. The full loan application process will start as soon as you have an agreement to buy your new home. You will need to provide things like proof of income, your last 2 years' income tax returns, and more. Your MLO will know exactly what you need to provide, and the sooner you share the needed documents, the quicker the process will move along, so be sure to stay in constant contact. Exactly how long your application will take will depend on many factors, but what is critical is that you do not do anything during that time that might change your credit score or credit report. Here are 10 things to avoid until after your loan has closed. Change jobs or try self-employment. Buy a new vehicle or any major purchase. Buy furniture before you complete your home purchase. Co-sign a loan for anyone. Spend the money you've saved for your down payment and closing costs. Apply for any new credit, including store credit cards. Make large deposits into your checking or savings account. Use credit cards for large purchases. Let any payments fall behind, or open or establish any new bank accounts. This list isn't all-inclusive, so remember to ask your MLO if you have any questions about whether something may affect your ability to get a loan. Once all documents have been provided, your application has been approved, and appraisals, inspections, and other items have been completed, it is time to close. Your MLO will let you know when and where it will take place and what you will need. This will also be when you pay your down payment, as well as other costs associated with the closing. You will know exactly what those amounts are before the closing and whether you need a cashier's check or wire for the amount. One of the things you have to provide is a valid form of ID that has not expired. You will sign documents and receive the keys to your new home. Now the only thing that is left to do is start moving. Buying a home is an exciting time, but it's a big financial transaction. It is critical to be open and honest with your MLO throughout the process, and to be responsive when you need to provide documents or information. Don't hesitate to ask questions, and make sure you take your time to understand everything. The key is to find a partner you can trust to guide you through the process. Please know that First Commonwealth Bank is an equal housing lender, and my NMLS number is 1033243. Thank you so much for joining us today.